Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. This morning what I'd like to do is talk about the equity markets. And as you can see, the equity markets indeed started probably a bit of a correction right now. And as to how far it goes, we're not really sure. All you can do is watch the support level or watch the price and volume action. But let's take a step back. The market was acting pretty strong going into last week, and of course after Federal Chairman Ben Bernanke gave his speech, there's something in there the markets didn't like. Doesn't really matter what it was, the market sold off very hard. It was pretty much anticipated that the metals would get hit hard, as would the bond market. However, it was kind of a little bit of a surprise that the equities got hit so hard. Anyway, so we saw big volume selling on Wednesday and Thursday. However, on Friday, which we had the biggest volume on the NASDAQ and the S&P since going back to about September of 2011, the markets got a bit of a bounce. Now, that wasn't on the NASDAQ, but it was on the S&P and the Dow. Now, at this point, though, the S&P did meet some resistance at 1600 level. That was on Friday, and this morning is undercutting that level. So, we may get a little bit more downside. Of course, depends how today ends up. The NASDAQ also undercuts Friday's lows. We're right above that 3,300 level. That may be a support level for the NASDAQ. We don't know, but if it can't hold this 3,300 level, NASDAQ may indeed go down to about the 3,200 level, maybe even a little below that, and that's where its 200-day moving average is. NASDAQ may want to test its 200-day moving average. Same thing on the S&P. If it can't hold these levels, it might go down to 1536. And next support level, right around the 200-day, might be right about the 1500 level. So the important thing is at this time that you probably should not be buying new positions. You should always be looking for long positions. So at this time, what I do is I run a number of screens while the market's correcting. And namely, what I like to do is relative strength. I like to see which stocks are holding up the strongest, because when the market does turn, those are probably going to be the stocks, first ones out of the gate, that may lead the next rally phase up. Now, there's no telling how long the correction will go, but if you run that kind of screen, you'll be ready for when the market does turn. Another kind of screen I like to run is top fundamentals. You want to have a list of the strongest stocks fundamentally, and then you want to see how they perform, because when the market turns, you want to make sure that you're looking at those stocks. So now let me take a step back. Now, as bad as everything appears right now, and it does look pretty bad, I mean, the selling's pretty strong, there have been pockets of strength. There still does seem to be this rotation out of defensive stocks into growth stocks. If you look at restaurant stocks, they're still near their highs. A lot of stocks in that category. If you look at semiconductor stocks, a lot of those stocks are holding up very well also. Now, in the biotech space, a lot of the big cap biotechs got hit. However, you do have a lot of small cap biotechs, companies that aren't necessarily making money but have some new concepts. A lot of those stocks are moving near their highs. So these are the areas you should be looking. In the internet retail space, there's a lot of stocks doing very well there as well. So be cautious. The market is correcting right now. However, don't just walk away and fall asleep. Keep building your watch list. Look for stocks that are showing strength. And now we're going to wait to see if we can get some confirmation of a bottom, then a confirmation of a follow-through day going out towards the end of the week, or we may see some more downside. So as always, the price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting you from the CME Group trading floor in Chicago, and good luck.